Welcome. Hi, I'm Lee Thurburn, and I'd like to welcome you back to another episode of Live Stream Lee. We talk about business and all things business so that you, as a business owner, can make more money, have an earlier retirement, work less, have more time with your family, and just in general, enjoy your business more by growing faster. So, our goal is to help you do that. Today, we're going to be talking about a topic that I spent a lot of time thinking about. And quite honestly, there's no way I'm going to be able to do this without breaking out a spreadsheet. We're on the subject of business plans. And you can't really finish a conversation about business plans unless you have talked about your cash flow projection spreadsheet. Now, the first two episodes on the topic of business plan, we talked a lot about the document and all the aspects of the document that have to be considered. One of the things we mentioned was the cash flow projection spreadsheet. So today we're going to start a two-part episode on how to build an appropriate cash flow projection spreadsheet. Now, we're going to build a spreadsheet. I'm going to show you how to do it, but I think you're going to find it very helpful to actually have a copy of the spreadsheet that we're going to be looking at. So if you want that, please go to livestreamlee.com and join the community. And when you do that, you'll be able to get the spreadsheet, which will be posted for you to download from the community. Now, we're going to show you how it works and also show you how to modify it. So this is going to be a very detailed, and I'm going to just put the spreadsheet up on screen and then talk to you about it. So you're not going to see me, you're going to see a spreadsheet. So just be prepared for a pretty deep dive. Before I do that, I want to also mention to you that if you join the Apricot Rocket networking community, which you can find out more about by going to livestreamlee.com, you're going to get some of this wonderful swag, these t-shirts and long sleeve t-shirts that we've just got in. And you can see my wonderful mannequin. Looks a little bit like one of those Star Trek people, doesn't it? Anyway, that's our swag, which I'm offering to you if by chance you decide and to join one of our networking groups. They're online, they're virtual, and so that's just kind of a little bonus. But if you're interested, let me know. You can always reach out to me. I also want to mention that when you join the Livestream Lee online community, you get an account with Apricot Rocket. And one of the many things that you get as a benefit of having that account is the ability to tell us about your services so that we can help match you with people that would maybe be interested in getting in touch with you about your services. Our t-shirts, by the way, were provided to us by a guy named Bob Hurt with Impressions Unlimited. These are wonderful, smooth, comfortable shirts. And if you need swag for your business, go to livestreamlee.com, and in the right-hand column, you're going to see a link for Bob Hurt, Impressions Unlimited. Click there to get in touch with Bob. Bob has, without a doubt, the best prices in the Metroplex, probably the best prices on the internet. He's been in the business for over 50 years. And if you need some swag for your business, Bob Hurt's the guy to talk to. And so with that said, I'm going to go ahead and launch a spreadsheet. So first I have to click share, and I'm going to share my screen. And now I'm going to get to choose an application. And where is my application? Here it is. So load that. Now come back over here, share screen, there it is. share the spreadsheet application. Okay, I'm going to make this much larger so that we can all see it in good detail. And I'm doing this because you probably don't have super resolution. And now what I'm doing, the first thing I want to show you on this spreadsheet is it is designed to help you predict cash flow. Okay, so this spreadsheet is great at helping you. Actually, I'm going to come back and minimize this and come back and just talk to you from, well, how do I get this back here? Well, here I am. So let's see if I can't put the spreadsheet up right next to me. How do I do that? Oh boy, this is one of those technical things that I'm not quite sure. I have stop screen video file. There we go. Spreadsheet, minimize. Come on, share the spreadsheet. Share, come on. Stop screen, share screen. This is not supposed to be this difficult. Well, here's what I'm going to do. I'm just going to, there we go, it's up. Awesome. Actually, now I need to come over here. Well, I am lost on this thing. Stop sharing. Here we go. Let me come back here and just talk to you a second. A cash flow projection spreadsheet is supposed to answer three big questions for you. Number one is how much money do I need when I want to start a business? Number two is when that business gets going, will it have enough cash flow to not only sustain the business, but grow the business? And then number three, at the end of the day, at the end of time, not the end of the universe, but the end of the game, will I have made enough money to justify the risk that I have taken on by starting this business? So your spreadsheet, your cash flow projection spreadsheet is critical to answering those three things. So what I want to do is I'm just going to jump in. I'm going to show you how this spreadsheet works. So I'm going to click share screen. Let's do this again. Application window, spreadsheet, share, and I think this is, yes, perfect. It's showing what I wanted it to show. So on the screen, now I can actually see what I'm showing. So on the screen, we have we have basically five or six different pages. Now, what I need to do is I need to move this up so that you can see down at the bottom. Hopefully you can see at the very bottom of the spreadsheet, there are some tabs. There's a tab for total summary. There's a tab for DFW revenue projection, and I'm going to just resize this. There's a tab for DFW cost of sales. Now, this spreadsheet I used for a business plan that I did several years ago. And so I had different sections of the business plan. There's a section for expenses, which is typical. There's a section for payroll, which is also a typical expenditure that most businesses have. And then I have a detail section for marketing, which we're going to actually spend some time on today, talking through the marketing section. So I've got these sized now so that hopefully you can see them, but these are the 6 different tabs on the spreadsheet. Now, if I come back to the summary spreadsheet, the top portion, which I'm highlighting now, this top portion takes revenues, cost of sales, calculates gross profit, brings in other expenses, which you might think of as general and administrative expenses, and then calculates a net income. So the top few rows of the summary page are designed to show you a super quick demonstration or representation of what your income is going to look like from the business over the course of months. Now, I almost never do a spreadsheet for more than a couple of years. So your very top row on all spreadsheets is exactly the same. It's month number 1, month number 2, month number 3, and so on until you get out to a total column for year number 1, and then you repeat that for year number 2. So what we're going to do is we're going to go look at the revenues, the cost of sales, we're going to calculate gross profit, we're going to look at expenses, and then we're going to look at net income. Now down below is where you make adjustments to your net income to see what your actual cash flow is. So we're going to postpone that conversation for a moment. So in this example, we're presuming that you are creating a business plan for a restaurant. Okay, so when you think about a restaurant and we think about revenues, so I'm going to go ahead and click on the revenue page now. When you think about a restaurant and you think about revenues, you typically are going to break your revenues into food sales, beverage sales that are non-alcoholic, beverage sales that are alcoholic, and then you'll have your total food sales. So I'm just going to bold this line. And then so now if your food sales, for example, let's say that you predict, and I'm going to come back to how you do this. I want to show you how the spreadsheet works first. Let's say you predict your food sales for your first month in business will be $20,000. That's not a very strong revenue for a restaurant. That's what, $5,000 a week? That is a very minimal amount of revenue for a restaurant. But let's say that that's it. You're predicting $20,000 in sales. So we plug the $20,000 in food sales. Your total income is $20,000. If we come back over to your total summary page, you'll see $20,000 pops into your revenue line. Okay, so this is how the data flows from the detail pages up to the summary page. So we come back over to revenues, and let's say that our non-alcoholic beverage sales per week are $1,500, and our alcoholic beverage sales per week are $3,500. Okay, so now we have a $25,000 revenue for the first week. We come back over to the summary page, you can see that shows $25,000. So all we're doing is rolling the data forward into the summary. Now, presuming for the moment that we can predict what our revenues will be each month, we might grow our revenues to 25,000 and then grow them to 30,000 and so on. So as your revenues grow month over month over month, you're going to have your total page revenues grow month over month over month. Okay, so the construction of the page basically shows how those things flow together. Now, you might have a growth factor that you want to apply, and you might figure that your revenues are going to grow by, say, $5,000 per month. And so you might use column B to have your growth factor in. Now you can just do your revenue for the second month is your revenue for the month before plus the growth factor. Okay, now, because the way spreadsheets work, you're going to have to set column B by using the little $sign. You set column B as your growth factor. Now you can just drag this on out, and you'll see that your revenues grow month over month over month by $5,000. So if we do the same thing for alcoholic beverage sales, let's say our non-alcoholic beverage sales grow by 250 and our alcoholic beverage sales grow by 750. Okay, so now what we're going to do is we're going to use this cell value, and we're just going to copy it down. And then we're going to copy these across. And now we have predicted revenues of 25,000, 31,000, and so on. You'll see that that now flows up to your revenue line, and it factors in a reasonable growth rate or a growth rate. Now you can come back down and you can start playing with the food sales growth rate and the beverage sales growth rates, and you can have some what if. You can play what if. What if we grow at $300 a month instead of, $250 a month? You can start playing what if. Now, all we've focused on is the revenue. And again, we're pretending like this is for a restaurant business. Well, when you think about cost of sales, typically a restaurant is going to have cost of sales that are going to be structured exactly like your revenue. So you're going to have cost of food, cost of non-alcoholic beverages, and cost of alcoholic beverages. Now, it's typical in the restaurant industry to have a target as your food cost being a percentage of your revenue. And so if you have a target of your food cost as a percentage of revenue, you might have a target of, say, 25%. So if we put 0.25 in column B as our food cost percent, and then we take the month column, and we multiply that. So I do plus, take the column, the food cost factor, and then times, and I come over to your revenue, and I click on the month, and I hit enter. Now we have $5,000 in that field. Now, if you see this right here, it says B3. This is column B, row 3. We need to set it to column B so it doesn't change. So I put the little dollar sign in. I hit enter, and now my revenue, my food cost percentage is set. Well, I already had that in there. So if we want to do the same thing for non-alcoholic and alcoholic beverages, our non-alcoholic beverages, things like Coca-Cola and stuff like that, food cost is probably 15%. So we'll put in a 0.15. And an alcoholic beverage food cost is probably 20%. We'll put in a 0.2. I'm actually going to change the layout here so that these look, you can see the points. And now we've got food cost factored in. And here we've got our total cost of goods sold. And all I did was set this column to equal the sum of these columns, okay? Or this row to be the sum of these rows. So now we've got our total food cost. 59.25, 73.70. So if I come back over to total revenue, 59.25, 73.70. So now I've got 25,000 in revenue, 59.25 in cost of sales, and a gross profit of 19,075. Okay, so at this point now, I've predicted, or at least from a spreadsheet perspective, I've plugged in and shown you how revenue flows up and cost of goods sold flows up to the summary page. Let's go look at the other expenses. So if I come down to the expenses line, here we have month number 1 and month number 2. And let's come down to a very common expense. Let me just do view and freeze panes. So I'm going to freeze the panes here so I can scroll down. I'm going to come down to rent. Rent is often your single easiest thing to predict. So let's say that for your restaurant, you have a monthly rent cost of, let's make it reasonably small, $1,500. Okay, so we plug in $1,500. Now, your rent is not probably going to change month over month over month. So what we're going to do is we're just going to capture that rent amount, and we're going to drag it on out so that for the first 12 months, we show our rent $1,500 a month. Well, we come down to the total expense line, and the total expense line only has $1,500. So now we come back to the total summary, and here's our expense line of $1,500. And so we had revenues of $25,000, food cost of $59.25, gross profit $19,000, rent $1,500. So our net income is $17,575. Okay, so now that we have the basic structure put into place, all we have to do is fill in the blanks for all of the other kinds of expenses that we're going to have. Now, the easiest sort of cheating, if you will, way to do this is to just simply plug in a number and drag it across. And for something like rent, that actually works pretty good. But most of your other expenses are going to be somewhat variable. Okay, if you don't have charitable donations, you can ignore charitable donations. Here in the first column, I have a lot of expense items that are, sort of reasonable for most kinds of businesses. What you'll have in the way of general and administrative expenses for your business might be somewhat different. But let's go ahead and just factor in a few things. So let's say you have insurance. Okay, so you're going to have some insurance costs. Now, for your business, you might have workers' comp. So if we just insert a row here for workers' comp, and so we just put in workers' comp, and let's say your workers' comp premium each month is $375. We plug in 375, we copy that across. That also typically, insurance is usually a fairly stable and predictable thing. So now you've got workers' comp. Let's say that you have internet expenses. Your internet expenses are, $175 because it includes your phone. So we're going to do that plus 175. We're going to drag this across, and now we've got internet expenses. Postage and delivery, printing, professional fees. Let's say you have some accounting fees. You have an accountant that does your books. That's $500 a month. So we just copy that across. And actually, most restaurants have some sort of website cost. Let's make that $100 a month. And we drag that across. And you see what we're doing? We're just sort of filling in all of these expenses. And as we do so, our total expenses are going up. And that's flowing up to our other expenses line, and our net income is being adjusted. It's being adjusted downward. Now, we haven't talked about labor yet. So we have a tab for labor. Now, your labor is going to, again, be unique for your specific particular business, but you might have, in this case, you might have, say, management fees. Okay, so these management fees are for your store manager. Now, your store manager is going to earn a, well, let's just call this a store manager. Okay, so store manager. Okay, so we're going to come over and let's say the store manager is making $60,000 a year. Not much. So that's $5,000 a month, right? So now we're just going to do that. We're going to copy that over, and we're going to come down. And let's say that at the end of the first 6 months, the store manager gets a $500 a month raise. So for the second half of the year, it's $5,500 a month. Okay, now you've already got an accounting fee factored in. So let's go with, instead of bookkeeper, let's go in with chef. So you have a chef to run the kitchen. They also make, let's say they make a little more. They make $6,000 a month because you need to spend a lot of money and have, not a lot of money, but you need to spend money and have a good chef. So that's $70,000 a year, $72,000 a year. So now we've factored that in. Now you're going to need to have some cleaning staff. So staff A might be your kitchen help. Okay, and so you might have a total of, let's say you've got 3 people at $3,000 a month each. So you get $9,000 for kitchen help. Okay, so now you've got 9,000, and I'm just going to do a little thing here and copy and pull this down. And now we have 9,000 for kitchen help. I need to do our payroll total line here so that we get the total in for payroll. And we drag this across. And so for right now, let's just stop at that. We've got a store manager, a chef, kitchen help. And at this point, let's don't worry about wait staff or anything like that. We'll just call kitchen help everything else. We might have overpaid the kitchen help, but the point right now isn't worrying about those details. The point right now is worrying about the structure. So we're going to come back and look at taxes in a moment. But if we come down here, we've got our total payroll line. The total payroll line rolls up to here where it says total payroll expense, and this is on your expenses sheet. That increases your expenses. Now, if we go look at our total summary shows that we have $22,650 in other expenses. So our first month we have a loss of $3,575. The next month we have a net income of $1,000. Now, I don't know whether these numbers are realistic or not, and that's not really the important thing for us to worry about in this particular episode, this particular exercise. The structure of how your spreadsheet works is the first thing I want to introduce to you. And I'm looking at the clock and seeing that we actually have already used 25 minutes out of our 30 minutes of total time. So I'm not going to be able to cover a whole lot more. So let me do this. Let me go ahead and cover payroll taxes. And then we're going to have to come back. We'll probably do 2 or 3 more episodes on this because this is an important aspect of your business plan. So I'm going to come back to the payroll tab. You see that we had total payroll of $20,000. Now that's our payroll, but we need to calculate either benefits or taxes. Now let's pretend that we don't have any benefits like health insurance or 401ks or anything like that. So our taxable payroll is going to be payroll plus benefits. Okay, so I've just added the next 2 lines together. And so we now have a taxable payroll, and here's our taxes. Federal unemployment tax is going to be about 0.07%. So actually 0.7%, so 7/10 of a cent. So we're going to factor that in. We're going to show it. Here we go. Your Medicare tax is going to, now this is the tax that's on the employer. I think it's about 0.643%. Social Security, you know what, I'm going to have to go look that up. But let's see, your Social Security tax might actually be 0.043. Your state tax is 0.027. So if we add all of this up, so you have about 14%, taxes, and that's actually about right. Your total taxes are going to be about 14%. Okay, so as an employer, you're going to have total taxes of 14%. And so what we have to do is we have to actually add that in as a $100%. So now we're going to do total tax rate. Actually, these should be rates. I should put them in here, make that larger. There we go. And now our tax is going to be that times our payroll. So now if I just go ahead and freeze the row and freeze the column and freeze the row, now I can just drag this down and increase the size of this cell. So here's our total taxes, $2,826 on 20,000. So 2,826 plus the 20,000 is 22,286. I probably should just do this. I should probably just make all of these numbers show the dollars and cents. That way it looks more common. So now we've put our total payroll in. If we then go look at our expense page shows the total amount. If we look at our total summary page, it shows that we've gone up. We've now run over time. Actually, no, we haven't quite run over time, but we have run out of time. So constructing your spreadsheet is really fundamentally pretty simple, but you have to tie the detail together. And by the time when you tie the detail together, it gives you the ability to go in and start playing what if. On Monday, we're going to dive back into the spreadsheet again. We're going to continue building out the spreadsheet, and then I'm going to show you how to get very granular on your single most challenging task, which is predicting revenue. So hopefully this starting point has helped you to get a handle on, I'm going to go ahead and save that, to get a handle on the complexity of building out a cash flow projection. Business is not rocket science, but it does involve a little bit of dealing with the unknowns. You have to be able to predict things like costs. There's a lot of unknowns that happen in the world of business. And unfortunately, when those come up, some of them are very unpleasant. And the best way for you to be able to not be negatively surprised when something unexpected happens is to surround yourself with good people. One of the people that I surround myself with is Scott Reeb, who's a business attorney, and he is also an entrepreneur. And when I have a new idea, or when somebody approaches me with an idea, I call Scott and run it by him because I trust his judgment. If you don't already have a good attorney that you trust, go to lifestreamlee.com, click on the Scott Reeb button on the right-hand side. That'll take you to his website where you can learn a little bit about him. And if you'd like to give him, get on a schedule, he offers a free consultation. Have a chat with Scott. You'll be glad you did. He's a good guy to know. All right. So we'll be back on Monday at 3 o'clock. Tomorrow, Friday at 3 o'clock, we're interviewing Dustin Miles. He is the managing partner of Momentum Multifamily. I have known Dustin for 25 years now. He actually worked for me back when I had a company called FlashNet, dial-up internet company. He's since then gone on and done a number of things, one of which was to start a real estate investment and syndication firm where he helps people just like you and me participate in large multifamily real estate investments, Class A properties. And we're going to talk to Dustin about his business, how he's grown it, what challenges he's encountered, and what he sees looking forward into the future. I hope you'll join me tomorrow to hear what Dustin has to say. Thanks for joining me today. I'll see you tomorrow.